Get ready before life happens. The podcast helping you navigate life's what ifs.
AI is changing financial advice. The real question is what role humans will play going forward. Welcome to Get Ready Before Life Happens. I'm your host, Tony Stewart. Today I'm joined by Chris Heye, founder of Wealth Care Planning and Wealth Care Solutions. Chris, welcome back to the podcast.
Hey, Tony. Great to be here. Thanks for having me.
Yeah, excited for this conversation. You've been doing so many great things and, writing some really what I think fascinating articles about the future of AI and financial advice. So, let's jump into it. Just give us a quick rundown of your origin story and how it led you to start this focus on how AI will impact the future of financial advice.
Yeah, I actually have been interested in AI for decades. I was exposed and met some of the guys, and back then it was all guys who were doing AI research at MIT. This was in the 90s, and they were super smart guys. They were cognitive scientists, philosophers. They were citing, analytical philosophers and cognitive scientists, and I thought it was great, but the tools they were using, and I remember doing some programming, they were just very, very basic. And really, not, I didn't think very impactful at the time. So I was really interested in it, but I didn't really see the utility at that point in time. But I've always been kind of interested in, and then I'm sure that AI has impacted me more than impacted all of us over the last, 20 years or so than we even know. But I still didn't see it as, the huge game changer that even people back then were talking about. But that all changed when when I started using ChatGPT and other large language models. I would have this, whatever those 2 or 3 years ago now, and I would have those, holy bleep moments using them, just saying, "Oh my gosh, it can do this, it can do that, it can help me with this," and so now I mean I'm on it every day. One or more of these LLMs I use literally every day for all kinds of stuff. So, again, the introduction of these large language models really rekindled my interest in AI, and then sort of naturally had me start to think about, well, how is that impacting me and my role and my job and my business? But then also started thinking more and more about how it's going to impact the financial services industry. Um, so that's kind of how I got here. And I continue to be very interested in trying to understand and predict, the ramifications of these new technologies for the financial services industries. And I'm starting to coalesce my thinking around a few ideas that are a little bit different than what you might see typically coming out of, especially the financial services industry.
Yeah, and for people watching and listening, I'll be linking to Chris's LinkedIn newsletter where he's really been tackling these issues. And, you've done just such an excellent job of covering this. Could you give us just a quick overview of what a large language model is?
Yeah, so there was a big breakthrough, I think, in about 2018. So basically, and this is something that the researchers I met at MIT were doing. They're trying to understand. A friend of mine used to call it the bag of words. Like, we read a sentence and we read a paragraph and we get it. For the most part, we know what it means. We know what the most important sentence in the paragraph is. We know what some of the most important words in the sentence are. We get that kind of intuitively. But teaching a computer to do that, in fact, is really, really, really hard. And again, these guys were doing back this, 30 years ago. And so these large language models, there's a big breakthrough in, I think, 2018. There's a paper called something with the word attention in it, identifying the attention. You could find it, or I could send it to you. It's extremely technical. So unless you have a PhD in advanced cognitive science, you're probably not going to understand much of it. But basically the idea is using these statistical methods. These guys kind of figured out a way to understand better, to derive that meaning, and what they're able to do is again to figure out what the most important words are in a sentence and figure out some of the most important sentence in a paragraph in a whole paper potentially. And they're then and they can they and then when you ask them questions, they use these statistical techniques to provide each of the next words. So you get into big discussions about how intelligent do they really understand? Is it just statistics? But basically, the bottom line is that these models have now been able to figure out to a very high level what you're trying to say when you type in these words, and what your questions are, and what the nature of your question is, and what the most important part of your question is, and then how that relates to other questions you've asked. And so that's been the huge breakthrough that's occurred in the last few years. And that's really, engendered this, explosion of these, large language models. And some of them have different capabilities, but my understanding is fundamentally the technology under them is pretty similar.
Yeah, and for everybody who hasn't really played around with it, is I would encourage you to go check out ChatGPT or Gemini or Claude and give it a try, because it really is incredible how far they've come. And yeah, they're not always right. They still hallucinate a little bit. But what is interesting, the more I use ChatGPT, the better it becomes, where sometimes I almost go, wow, it could almost replace me on, doing my podcast show notes and things like
Well, it
that.
gets to
It's
know
incredible.
you and know what you're doing, and it can understand, it does remember part, not 100%, but it remembers a lot of your previous conversations. So now if I, talk about, hey, I want to, thinking about using this as a marketing message, or thinking of using this as for a research topic, it'll go, oh yeah, that's closely related to it. It keeps coming back and saying, yeah, that fits in really well with your sort of overall approach. And it'll go back and it'll spit back to me, what we've talked about in previous conversations, and saying, well, here's how it fits into, this paradigm that you've been advancing, et cetera. And so that seems to me, that seems to be getting better. I don't really have a lot of problems with hallucination now. I have problems with, like, sometimes I'll ask, help I use it for like wordsmithing, and it'll come back with some really sort of awkward language. And I'm like, really? Um,
Yeah.
but in general, it keeps getting better. I mean, it's the other really powerful thing about AI is that it holds out the possibility, really the probability of sort of rapid advancements, because you build these models, and then they start to train themselves. And when you get models training models instead of people, because to start, it's all people training the model. So I didn't like that outcome. But after a while, if you teach the model, say, we're looking for these outcomes. When you say this, we really don't want you to, phrase it this way. You want to phrase it this way. And then the models start doing the training themselves. Then you have this potential for really exponential growth, which is
Yeah.
different than, building railroads or building, you don't get that same type of really fast exponential growth in a lot of these other technologies. You did with the internet. You got those network effects. It applied to the internet, but it really applies in force with these large language models and other AI related algorithms.
Yeah, it almost seems like Moore's law in effect, in a way.
It's
I don't
like
remember
Moore's law on
exactly Moore's.
steroids almost. And I think someone I saw some phrase, it was like Moore's law. It's like the Moore's law of Moore's law kind of thing.
Yeah, just at that rapid expansion. So, let's talk about professional financial advisory work. Why do you feel that professional financial advisory work is undergoing a major transformation?
Well, it was interesting because I don't know if you saw, I think it came out last summer, sometime last year. Microsoft did that report where they analyzed a bunch of conversations people had with through Bing with their large language model, and it tried to use those conversations as a way to anticipate which occupations are most exposed to AI. And what they found is, some of the highest exposure were, what you would expect. There was some like, customer service reps, or they had historians was one category, certain types of account professionals, accounting professionals. And then at the bottom was literally like, dredge operators and, power machine tool operators, what you would expect way at the bottom. Um, but they concluded was that the kind of advice and skills that financial professionals have are pretty likely to be are pretty replaceable. That might be a better way to put it. So they had this measure of about 0 to 45 or something, with 45 being the most replaceable and zero being the dredge operators. Um, you know, Financial advisors were like at 0.35. So that sort of kicked off a big debate within the industry. And my initial reaction, so my reaction is that there's roughly sort of two schools of thought that have come out of that. Um, the one school of thought that I think is most prevalent within the industry, I call it the "what me worry." For those older adults who remember Mad Magazine and Alfred E. Newman, it's apologies to him. But the comments that I see most frequently coming from advisors are like, sure, it's going to make some changes, but we've kind of we've been through this. We survived the internet, we survived robo-advisors, we survived the 28 panic, we survived COVID. We're going to be fine. You know, it'll be our co-pilot. That's the word. It's going to enhance our productivity. And yeah, maybe some advisors are going to kind of fall by the wayside, but basically it's going to make us better, and it's not going to, it's not a fundamental threat to our business. The opposing view, I call the boiling frog view, but that analogy with the frogs are sitting in water and it's warm and warm and warm, and all of a sudden, or not, after a while, they realize they're boiling and, bad things happen. So the boiling frog is like, no, you guys are screwed. Basically it's, these large language models are, getting really good, and they're getting really good at the kind of stuff that, things like portfolio management and risk assessments and basic financial planning. A few months ago, OpenAI purchased a financial planning software company, a small financial planning software company, and hired their CEO. So what does that tell you? Um, and I'm sure other these LLMs are following suit. When you think about it, if you're Sam Altman or the head of Microsoft, you're thinking, what are some of the big industries we can go after? I mean, financial services got to be close to the top of the list. Financial services and healthcare probably the two, and software development. But so the idea is that you know the it's basically the boiling frog view is basically, tons of jobs are going to be lost. The whole industry is going to be completely transformed, and you got maybe a few good years left, but that's it. Um, so those are two, they're somewhat straw men, but those are, tend to see comments falling into one of those two camps. Um, and so my take is slightly different. I don't fall quite into either one of those camps. I have been doing some research on, so, at MIT, I studied this, the MIT, you study a lot about history of technological change. And my feeling is, generally been over the years is that, you know, most of the times these technologies create more jobs than they destroy. I mean, electricity, the railroads, even the internet, sure, they destroyed some jobs, but they end up creating more. So the technical optimist side of me says, sure, some jobs are gonna, go by the wayside, but we're gonna create a bunch more. And my concern with these large language models is that this time could be different. I'm not saying I firmly believe it is different, but it could be different in part because of the nature we were talking about, sort of how AI can change and evolve and grow so fast. It can its capabilities can grow exponentially, in a different way that railroads or electricity or the steam engine did. But the other thing that more importantly is the types of labor that AI could potentially replace. Most technologies, the internet started to change this. As most major technologies we saw tended to replace manual labor. It was mostly manual labor, pretty low to medium skilled labor. Um, but AI has the potential to replace much higher skilled labor. So it could take out, this bigger strata and can go across, it's very broad based. I mean, if you look at electricity, it was big, but there was still some limits in scope. And when you think about where these large language, it's hard to think of a place, again, unless you're a dredge operator, where these large language models aren't going to start affecting your occupation, your profession. So it does have, to me, that gives it a slightly different character than some of these other advancements. But we'll see. We'll see. As far as the financial services industry, I've been my thinking has been influenced by, again, some more work coming out of MIT. This guy, particularly David Autor, who's done a lot of work. It's spelled Autor. Really excellent work. Done work on sort of on labor and technology, and so I won't go into detail, but his take is that AI doesn't replace jobs, but it replaces skills and levels of expertise. So it's not so much a question of what jobs are going to be replaced. It's more of a question of what types of skills these firms, financial services firms, decide to replace. And in my view, and I've got a paper coming out, it's going to come out in early May in the Journal of Financial Planning that provides a much more detailed description of these ideas. But the idea is that, to me, this suggests that there can be sort of two futures or two tracks that firms can go down. And the one is what would be like, I would call like an AI guided advisory or something like that, where it's basically a really smart, intelligent, high functioning robo, where it would be mostly for DIY, little or no advisor input, but it's got, great portfolio management capabilities, really nice software, really great, user experience. It'll have a little, behavioral coach there. I've built some of these, and so I know it can be done. There'll be a little behavioral coach, and it's be mostly for the DIY folks, but those are going to get really, 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 really good. And it, to the extent that those types of firms broaden, they could actually expand employment, because those you're not going to need advisors so much, but you need like software programmers, customer support people, troubleshooters, and then maybe some people who are working on partnering. So that's one path. The other path I see is it's more like a sort of a concierge level services that these professionals will provide, and it'll be, yes, they'll do all the portfolio management, the tax manager stuff, and they'll use AI to do a lot of that. But their expertise is really going to be focused on being almost like, coaches, really good communicators, really good coaches, consigliere, from the Godfather. Um, Speaking of Robert Duvall, his role in The
Yeah.
Godfather. So the expertise in those firms is going to be, yes, they're going to have technical expertise, but that'll be the software, the AI algorithms taking care of that. But the expertise will really be in communications, helping clients manage complexity, both sort of emotional complexity and financial complexity. And so the types of skills on that side. So in the first track, these AI advisories, the skills are going to be like the software developers. That's going to be the expertise, is really good software developers. Whereas other track, the expertise is really going to be really good communication, really good coaching capabilities, not technical expertise. Um, And you're seeing some of that already. So I think, I've called that like concierge level advisory. And I think you see that it's, family offices do a lot of this, some holistic financial planners do a lot of this. And I think that that's going to be an accelerated direction. And I do think you might be seeing more of these sort of, DIY robo advisors coming out. And I think that unless you align yourself on one of those tracks, as a financial professional, then that's going to be problematic because there's going to be these robo platforms that are really good at doing, financial planning, portfolio management, tax loss harvesting. They're going to get really good at that. And then there's going to be these other firms who are not only good at that, but they have really good people with really good communication skills, and they have a financial therapist, and they have a divorce counselor, and they have a family therapist. And then the people in the middle who, just do some financial planning and basic portfolio management. People are going to say, well, why am I paying you? I'll go to the robo. Or if I really have hard, complex financials, I'll go to the concierge. So at a high level, that's my take. I think the industry is going to start to bifurcate. And again, it's going to be about, replacing, it's going to be about which firms choose to replace what kind of skills and which firms choose to use AI to augment certain kinds of skills. That's really going to be the choice, I think, in the years ahead.
Yeah, I'm with you 100%, especially where I see the opportunity and the possibilities. And probably, the only way is the second path is, from what I understand and
Yeah.
talking to people who own financial planning firms, is that AI can pretty much efficiently and effectively manage an investment portfolio. And as you point out, who's going to want to pay 1% of AUM
Yeah.
for a human to do something that an AI can do probably better and explain it better? So,
And cost less, right? And explain it better and be available 24/7. These robot platforms, you go at 2 o'clock in the morning on Sunday, talk to your financial coach right there. Hey, I'm thinking about making this investment. What do you think?
yeah. And I see that, that's something, and I want to give a shout out to George Kinder and the life planning movement, because I think that is going to be the way to go is people who are using something like the George Kinder approach, where it's human first, vision first, your life goals first, before everything else. So, as part of that, how do you feel that advisors can remain relevant by leaning into the human side of advice?
I think that that's, maybe not the only path, but that I think that what they'll need to get better at communications. And I thought it was interesting. There was a study by Financial Planning, the online financial planning magazine, and they asked advisors what they thought was the skill most needed to be successful. And the number one they mentioned is relationship building. The number two skill was interpersonal communication. And the number three, distant third, was analytical skills. And so it says to me that they recognize this. And then they said the number one tool they would like to have is tools that help them communicate better. So that's where the focus a lot of my work has been, is developing capabilities to enable financial professionals to have these more difficult and sensitive conversations. Because I think that's where the real expertise is going to go. That's where um, that's where the demand is coming from the consumer side, and I think people will pay for that. I think people will pay for a good consigliere, will pay for a good coach, they'll pay for a good, communicator who helps them, and then I think the way that they're going to be most helpful is not around, again, picking stocks or, maximizing, beating the S&P by 2%. It's going to be, calming their clients' anxiety around money and market volatility. It's going to be helping them through health events and caregiving, cognitive decline, retirement income planning, complexity, really, complex, families who have, a large estate and maybe multi-generations. That's going to be the expertise that's going to be valued the most. And so what I would tell financial professionals is to, and I understand that there's a little bit of a dilemma because they don't get a lot of training in this area. but really work on your interpersonal people skills, your communication skills. I mean, there's all kinds of studies that show that most clients leave their advisor not because of poor portfolio performance, but it's poor communication. And I think that most clients will forgive an advisor who doesn't beat the S&P by much if they can help, manage their anxiety, deliver that peace of mind, help them with their mother who just got diagnosed with dementia, you know, help a widow whose husband just suddenly died of a heart attack. Those are going to be the types of services that I think most clients are going to value above and beyond, in most cases above and beyond, good portfolio performance, because that's just going to be kind of assumed. So I think that those are the types of skills, and I'd say if I were starting my own RIA, one of the first people I would hire would be some sort of, financial therapist, behavioral therapist, conversation coach. They wouldn't really need to know a ton, they wouldn't need to know anything really about portfolio management, but they would need to know about how to manage emotions around money. That would be their primary area of expertise. So I really think that's the direction it's headed. There's a lot of uncertainty, but it seems to me that AI is really, going to be replacing so many of those technical skills, that what's really going to become a premium are these human skills, communication skills, conversation skills.
Yeah, and it's interesting as women are leading the way on that is I've had so many guests on here who are who are female financial planners, and so many of them are trending towards more of a coaching aspect
Yeah.
anyway. And so many women leave their male financial planners when they have a major life transition to almost always go with a female financial planner. Not exclusively by any means, but
But
you
it
can
happens a
see that
lot.
trend.
Yeah. I mean, I've heard some horror stories from female friends of mine talking to, very bright female friends talking to male advisors and basically feel like they're being mansplained. And so I think that, and you could, I think you need to be a little careful, but, to the extent that these soft skills are seen as being more women, women being more capable of having these skills, I think, I want to be a little careful because obviously there's plenty of men out there who are very good communicators. But I think women, first of all, women live longer than men, and so there's women are going to have women baby boomers are going to have a lot of money. There's going to be a lot more wealthy women baby boomers than men, pretty soon. Um, so I think a lot of the clients are going to be more often women, and then I think that's going to attract more female advisors to the profession, which is a really good thing. I mean, there's no reason why the profession should be 80-20 male female. It should be 50-50. You could argue 50-50 at least going forward.
Yeah, definitely. And, as you point out, the bulk of the great wealth transfer, which we all talk about and hear about in financial service, is going to go to women, as you mentioned, because of longer life expectancy. And, so that's going to change the whole nature of what financial advice should be and what women will want um, from their financial, as you put it. I'm with you, their financial consigliere. I love that. You know, so
Yeah,
that might not
I
be a
think it's
job
very
title
fitting.
anybody wants to put, but
Yeah,
it
yeah, I think
describes
it's
it
very
really well.
fitting. Yeah, consigliere or a coach, but someone who provides not, just a sounding board, or a shoulder to lean on, or just to provide reassurance. Um, not necessarily so technical recommendations, but more sort of high level, how's this going to make you feel, types of recommendations. I think that that's what most people want.
Yeah, they want to solve problems. They want to make sure they have enough money, in their old age. They want to make sure the kids are taken care of. People are driven by those types of things, where often in financial services we're driven by product and
Right.
numbers and metrics. So one of the things, before we start to wrap up, is that we've talked about, you've written about the current low level of client satisfaction. What do you think the current level of low client satisfaction rates tells us?
Yeah, I've been looking at some of these numbers for a while. There was a good survey that came out a few years ago that compared what financial professionals were providing and what what their clients expected or wanted, and there was some really really big gaps. Um, and you know, they it was interesting that many clients expected financial planning and even things like healthcare planning or long-term care planning or certainly wealth transfer. They expected to get as much help with wealth transfer planning as basically portfolio management. And the gap between what they want and what they got was like 30, 40, 50, 60, 70%. 190% wanting him and only 20% getting it. So, and there's other studies that suggest that or ask, advisors what they say they're talking about, and the client saying, well, that's not what I heard. Um, so I've been saying for a while that this gap really can't persist. I hearken back to almost like it seems like almost like the automobile industry, US auto in the 60s and 70s, where consumers are like, I'd really like a small fuel efficient car that's reliable. And the American manufacturers for the most part weren't providing those, so they started buying Japanese cars, and now they're buying Korean cars. Um, and I think that something similar like that may be going on in the financial services industry, where there's sort of this expectation gap and this demand gap. It's just unsustainable. So, and I think now AI is only going to accelerate that. But I was saying a few years ago, this is before even ChatGPT came out, that someone like an Amazon might just come along and just say, hey, or Microsoft just say, we're going to do this. And there's certainly some barriers, and I'm not sure they can do it, but I think some variation of these large language models they can meet that. They can you know, close that gap and pull clients away. So I think that it's funny. I was thinking about this the other day. Just you go on LinkedIn or you read articles in the trade press, and you see a lot of articles about marketing, how to improve marketing, 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 marketing. You see that everywhere. And part of me is like, yeah, that's great. But if you're marketing something that no one wants, at some point getting back to the auto industry, it's like, it's that Edsel for those of us, those remember the car, the Edsel, which is like the biggest failure
Yeah.
in American car history. But Ford marketed the hell out of that, but no one wanted it. So what good does that marketing do? So part of me is saying like, great, market all you want. But if you have a product that no one wants, you know, you're wasting your time. So I think that I think that the profession really needs to change, and it really needs to more go over to this concierge slash consigliere model of delivering services. And if they can't provide that level, there's going to be these much cheaper options coming through that get you 70, 80, 90% of the way there at a much lower fee.
Yeah, I'm with you 100% that and we're seeing some of this with a lot of people. I know a lot of female financial planners who have become financial coaches, and financial coaches are growing. There's a growing number of them. There's a growing
Absolutely.
number, as you mentioned, financial therapists, divorce coaches. That You're seeing this already taking place outside the traditional model for a number of reasons. And, to harken back to what you were saying earlier about good communicators, all the people that I know who are, what I would consider great advisors were also great communicators and
Right.
were masters at developing
Right.
strong relationships and serving their clients, being in tune
Hmm.
with what their clients wanted. And I think this is, like you said, this is going to separate out, I think, those people who aren't doing that. So, yeah, I'm with you 100% on all this.
Yeah, good, good. Well, it'll be interesting to see how all this plays out. I mean, it does introduce a lot of uncertainty. Um, the internet, I mean, who anticipated that a company that started just selling, books online would become, the second largest company in the world or something. I'm meaning Amazon. So there's a lot of things can happen, and it's unpredictable, and it'll depend on, I think the other message that I like, and it's a little more optimistic message. We have choices. We have choices, at the individual level, at the firm level, and at the government level. We have choices how to use AI. And so, at the firm level, firms have choices whether they want to, use AI to augment existing set of skills or replace an existing set of skills, or maybe a little bit of both. So that they have a choice. They have agency. Um, and I think also, that I think I hope we're going to see a little bit more regulation of some of these firms, and it may be coming. We may be importing it from abroad, because I think in Europe that you might be seeing, you know, um, more attention paid to this and more concerns about privacy issues, and it's some of the content that these models are developing. So and we can. It's also, we could, right now, a lot of the gains to AI are going to already wealthy individuals, right? I mean, you look at, people who have shareholders in, the top, was it top 10 companies, or, responsible for most of the market movement. So right now, the concentration within, AI companies and technologies, that it's certainly helping wealthy people already. And what I'm hoping, and I think it does have the opportunity for, is to sort of democratize, well, many different segments of our economy, but make things have the potential to raise all boats, and especially raise the smaller boats up when the tide comes up. So that, there is a possibility that these wealthy actors will try to use political clout to rig the game in their favor, and I'm hoping that that doesn't happen. But again, that's a choice we can make. It's not inevitable.
Yeah, exactly. And I think people are starting to have these conversations, which is where it starts. I mean, we are seeing it in the US right now that, in my viewpoint, some of these big companies are trying to rig the game in their favor, but that's the history of the world. And we know that that doesn't always play out the way people
Right.
think that it will
And
play out.
it's to me, it's you as company, you're trying to beat your competitors, and that's fine, and try to do everything you can to stay ahead. Where, to me, the areas get a little much cloudier is when they try to use that economic clout to influence government legislation that favors them over others. That's where I kind of draw the line. Look, you do everything you can to make your company better, but don't use all those resources to rig the game in your favor. That seems to me unfair, and it's also going to, likely have detrimental outcomes for the vast majority of the population. So that's where I would like to see more attention focused on how we can make sure that these gains to AI are spread out in a more democratic fashion, and don't just accrue to the folks at the top of the pyramid.
Yeah, and I come back to that. Even if we think that certain people are controlling it or getting the majority of the benefits, you never know what's going to happen. These things don't shake out. And I think AI is one of those things that it's it's so uncertain how it's going to play out. There's so many possibilities that we can't say that this is going to happen if X, Y, Z, because it's a self-learning, you know, uh, I call it an alien intelligence that we've created. So we have no idea what it's going to do. I mean, a lot of people think it's already smarter than us as humans, um,
Well, it is,
or at least
and I
in some
mean, I
ways.
love that term. Of course, it's smarter than us. You can, do you know what happened in Mongolia in the 12th century? No,
I could
but
guess. No, I'm just kidding.
ChatGPT knows.
Yeah.
Do you know how to bake a souffle? You know, perfectly? No, but ChatGPT knows. So, depends how you, obviously it depends how you define intelligence, but in many ways, it's the ChatGPT is the greatest historian ever invented. It's probably the greatest, maybe not the greatest programmer, but it's close. Uh, um, it just knows so many more things than any one individual. So in that sense, it's way smarter than us, way smarter.
Yeah, yeah.
Um,
So, Chris, this has been an amazing conversation. But before we wrap up, I have what I call the Get Ready Hot Take Trio. These are three quick questions I ask all of my guests. They're super rapid
yeah.
fire in nature. The first is, what's one AI myth you're trying to break?
Um, I guess one myth is that there's a few of them. I don't believe in the singularity that the machines are going to take over. I don't put a lot of stock in that. So
No
people who are
Skynet?
really that's I don't believe in the Skynet scenario. I think there are lots of other, pernicious potential outcomes, but that's not one of them.
Fantastic. Yeah. And I'm starting to agree is a while ago I was worried about a Skynet outcome. I don't think that's the case anymore. Um, so I'm with you 100%. So let's get out the time machine for a minute. If you could go back in time, knowing what you know now about AI, what advice would you give your younger self?
Um, that's a good question. I would say, be hone some of those technical skills, hone those curiosity skills. Because for me, a lot of it is being curious, being open-minded, trying things out. So don't be afraid of technology. Embrace it. Assess it, and take out the good parts, but embrace it because I think that's the way. And that's just going to be life going forward. I think the Luddites of the world are going to be in pretty rough shape, unfortunately. So embrace it and figure out how you can leverage it and how you can use it to increase and enhance your own skills and expertise and interests.
I love that. I love that. So last question is, what's your number one tip to change the way we're thinking about AI?
Um, it's a few different ones. One is, we've already talked about, don't think about it in terms of replacing jobs. Thinking about more in placing skills. Now, again, there's obviously a relationship between those, but most people jobs requires, different types of skills, right? And so if you're thinking about, your own job and your vulnerability, try to focus on the skills that developing those skills that are harder for AI to replace. Again, like the communication skills, the human skills, the creative skills. I mean, I think one thing's interesting, like creators and content producers are sort of making a comeback because AI can't answer the question accurately without good content. And that's something I've been focusing on in my own models is developing a really rich, curated knowledge base. Um, so I think so try to think about so two pieces. So using AI to leverage, it's basically using AI to leverage your expertise that can't necessarily be replaced by AI. That's what I would think about, and that's what I would focus on.
I love that. So, Chris, where can people learn more about you and your work?
There's a few places, like you mentioned, I have a LinkedIn. They find me on LinkedIn, Chris Heye, Heye on LinkedIn. There's not too many Heyes out there. There is one more Chris Heye, um, but it's not me. Looks a little like me. But go to LinkedIn. You can find me there. Also, my newest set of chatbots, you can go to wealthchat.ai, and that's wealth with an extra H in it, WHEALTHCHAT. There you'll not only see information about the new products, but also there's a list of my publications there and some of my media appearances. So, but go to LinkedIn. I'm a big LinkedIn user. I have a newsletter. Usually, most of the stuff that I've been thinking about ends up at LinkedIn one way or another. You'll see a lot more after this paper comes out in the Journal of Financial Planning early next month. There'll be a lot more on AI. Um, So those are the best places to look. Again, I'm on LinkedIn a lot. If you go there, find me, shoot me a connection request, shoot me a little message, sign up for the newsletter. I think that's probably the best place to start.
Cool, cool. Thanks, Chris. And for everybody watching and listening, as always, if you have access to the show notes, all of these links will be in the show notes, so you can go there to find the links. Chris, thanks again for joining us on the Get Ready Before
Yeah.
Life Happens podcast.
Thanks, Tony. It was fun.
Yeah, it's always a pleasure. And thank you, everyone, as always, for tuning into this episode of Get Ready Before Life Happens. If you learned something today to change the way you think about money and AI, please be sure to subscribe and share it with a friend. You can also go to my website at tonystewart.com to join the Get Ready movement and get access to my newsletter and a whole bunch of free resources. Until next time, let's change the way we think about money.